Good morning and welcome to the Leadership and Insurance Podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Karthik, CEO, co-founder of Armilla Insurance. We just discussed that, and I'm thinking, I hope I've got that right. Are we just Armilla, or are we Armilla Insure, or
Armilla Assurance.
Assurance? There we go. Embarrassingly, if anyone had heard, we literally had that conversation about 10 seconds before we hit record. So it shows all best laid plans and things. Karthik, before I go and massacre any more of your company name and profile, perhaps be great if you could introduce yourself and the Armilla business.
Excellent. No, thank you for having me, Alex. I'm Karthik, CEO and co-founder of Armilla Assurance. And what we do at Armilla is essentially verify and guarantee the performance of AI models. With the proliferation and adoption of AI, one of the biggest challenges for enterprises is being sure about what they're procuring from third-party models. So we help enterprises break down the risks that are presented by these models with our technology and our platform, which forms our Armilla Verified and Assurance report. And then we provide a guarantee to our assessment as well. Essentially, should the performance of the model degrade and whatever KPI that we are assuring degrade, we will reimburse the enterprise as a protection of their return on investment.
Okay. Wow. So this is a kind of like net new risk, isn't it? This is where, and we have to be transparent and be flattering. You are certainly a business that's been a lot of buzz about. There's been a lot of excitement. We work very closely with the Lloyds Lab, and we want to dive into that Lloyds experience later. But there was a lot of excitement from people when we said we were going to have you on the podcast, because you fall into that absolutely net new risk category. This hasn't been done before. This sort of insurance contract, is that correct?
Definitely for AI models hasn't been done before.
Yeah.
It is absolutely an emerging category of risk. Anytime we get into, and I'll stick to the software space. Anytime we get into a new technology, it presents risks or risks emanate in different ways, right? Which may not have been seen before, or it would be the same risks, but the source of those risks is that new technology. So with AI, there is absolutely a whole host of risks, and how they emerge, how they present themselves to an organization. And now the question is, how does the organization and enterprise evolve in their risk management practices and protection of the organization from those risks? And that's where now we need to have some innovative new ways of risk transferring those exposures.
It falls into that kind of category, and I was talking about this with a cyber MGA, and we were talking about it falls into that category of it's not enough now just to offer insurance products that play at the point of failure, in that we have to work with insureds or potential insureds on education, evolution of kind of risk management. And we were talking about cyber, but we were saying even on the personal level, health insurance. I have my smartwatch on and it monitors how often I go to the gym, and that impacts kind of how the price of my health insurance. In your view, is that the only way that we're going to see insurance evolve? Because that's my belief, is that we've been at arm's length for too long, and now it's actually about giving people the tools to kind of improve risk management with these emerging risks.
Yeah, absolutely. I think the as we digitize different aspects of our personal lives, our corporate lives, the capability of measuring these risks is evolving, right? So this is not that the risks have changed in sort of established protections. It's how we monitor and measure those risks definitely is going to change. I mean, let's take auto insurance, for example. If we truly believe that self-driving cars will take over the market in the next decade or so, how we measure and who is even the insured now changes, and who provides the insurance also will change. And so the evolution is the insurance industry itself keeping up with the evolving trends and technologies. And of course, there's new categories of risks that are emerging as well. But now we have climate risk as a big sector that is growing, and we're trying to understand what that means for an organization. And similarly, AI, the risk of AI with the scale of adoption that we expect AI to have, that risk is going to be pretty massive. And we have just gotten started in even putting our arms around in understanding what those risks are. Some of those risks are very specific to AI models themselves. And some of these risks are existing risks, but they're impacted by this new technology. So in both these categories, we need to understand how we measure and monitor for that risk, and then, of course, provide the appropriate risk transfer. And absolutely, education is important. Risk managers are, your second line of defense or your third line of defense are removed from the first, the front office, right, which are implementing these solutions, improving the business from a revenue standpoint or a cost efficiency standpoint. They need to now start. So they're leading the pack. And so risk managers now need to keep up and understand what they need to do. And so that's where the education component comes through quite well. And then, of course, there's a two-way dialogue between the front and the back as to how do they manage that on an ongoing basis.
Where do you... I think that's a really interesting point, because I was thinking about the kind of risk manager is almost absent from the decision-making of which AI tools or AI models that are being implemented. It doesn't, when we're talking about it in this context, doesn't sound like a good idea. So where do you come into the situation, or where's the kind of best point for you to come into the situation? Because once the horse is bolted and someone's implemented something which isn't fit for purpose, presumably it's uninsurable, do they have to go through the framework? How does it work in practical terms about where you get involved?
Yeah, so typically where we are involved is, you're right in that the first line of the front office or the business makes a decision on what technology they need. Risk managers are not necessarily in the decision-making process. They're consulted for sure, but they're not the decision maker. But once that decision is made, part of that decisioning of, and let's stick to third-party sourcing. So third-party models. There was a recent report that we contributed to between MIT and BCG, which said that more than 70% of the companies are using third-party AI models, and 55% of the issues that they see with AI come from these third-party models, right? So when you're sourcing externally, while the business has chosen a specific vendor, part of that decision process is to consult with the risk managers, and that's where we step in. Right. We come in and do a full assessment of the AI model, both from a qualitative and a quantitative standpoint. So things like, will the model actually deliver? Does the model actually deliver on its stated goals? And the stated goal could be, a level of accuracy or a lack of bias in the model. Or if it's generative AI, the fact that it has not been trained on copyrighted or proprietary data. So there's multiple dimensions to this risk. So we put a comprehensive review of the model and the product, really. The model drives the product. And in the context of risk managers, help inform them as to what their exposures are, what the severity of that exposure could be, and then make the right decision. So now we need to be even more involved with and when I say we, I mean the risk managers need to be even more involved in that final decision. Once, and as part of the decision process to select a vendor. And once that's done, then you go and deploy that into production. So it comes before production. And then the part two of that is, once it's in production, how are you ensuring that the model continues to deliver? And this is, again, very specific to AI. We're moving from a world of deterministic decision making to probabilistic decision making.
Mm.
And if we know probability, there's a level of uncertainty into every outcome of that of a probabilistic system. Um, and so that uncertainty now represents a level of risk. So how big is that? What's the impact of that uncertainty in for that use case and for that company? And then you can make the right choices of if that's the vendor. It may be the most accurate model, but in another case, it might be exposing yourself to a very severe type of risk. So you may make different decisions on that buying process. And then, of course, ongoing monitoring to ensure that stated goal continues to be delivered.
Mm. I think I started with a sort of simplistic view of saying, what if you're buying a third party vendor, let's say piece of software that uses an
Mm-hmm.
AI model, you would have a certain understanding of that, you would have a certain analysis of that. But and forgive me if this is kind of a layman's question, but uh, it's more about the interaction between the business buying it and the uniqueness of that with how they interact with that software, how they use that software, and how they propose to use it, rather than you being able to give a score for a piece of software and then it just has a score. It's about how that company is choosing to use that software. Is that correct?
Absolutely right. Now you may have generic software. Let's say you were using a SaaS solution, and let's take ChatGPT as an example because everyone's familiar with
Everyone
ChatGPT
knows
these
that, right?
days.
Yeah, yeah.
So if you're using the version that's offered by OpenAI, that's one model, right? And so you can do one sort of analysis of that, and it can give a score, right, on different metrics. But when you come to the enterprise, specifically with AI, it gets retrained or customized a little bit or a lot with the enterprise's own data, right? So you'll have a foundation model or a base model, which then gets trained with the additional information about that enterprise, which then gives the right outcomes that are tailored to that organization. So that's where you're seeing it's not a one single score, but there's a baseline score, and then you customize that to ensure that in that context that the model still is within the bounds of what's acceptable.
Yeah. And where does you mentioned the sort of degradation you're keeping on that. Where does that and how does that degradation show itself over the course of time?
Yeah. So, and this is particularly true for self-learning models. So the promise of artificial intelligence really is that it continuously improves itself as it encounters more information about the world it exists in.
Mhm.
Um, and that improvement is what keeps it abreast. Now, the challenge with that as well is that improvement may not be what you need. It may be veering or drifting, and that's the technical term that's used. So you have things like data drift. So data drift means the incoming data that's now in the wild may be continuously differing from the data that the model was trained on. So the model is learning, but if the model is too brittle, it may not be able to deal with that drift, and now your decisions or your predictions from the model are off.
Right.
And so now you get to concept drift. So concept drift is that the concept that the model has learned is also drifting from the baseline. Some of it is, so you need to monitor to make sure that it's drifting in the right direction. Drift is not a bad thing if it's a self-learning model. You just need to make sure that it's within the constraints and it's not veering too far off the home base of what you want to do.
It's like it picking up bad habits and then keep going off in one direction. That's really interesting. Um, you wrote a piece quite recently called the adoption of AI and the trust deficit increasing. Um, well, I wanted to sort of extrapolate on that a little bit. We'll obviously share the link to that as well. But I just thought
Yeah.
it was really interesting about the trustworthiness and trust deficit. And whenever I think about the conversation about AI, it goes into trust. But what's interesting is something that you've already said in this conversation is that I was going to ask you about something about what barriers to widespread adoption. Well, if 70% of businesses are seemingly using some AI already, doesn't seem like widespread adoption is being restrictive. It's more, how do we know what ones to trust and what not to? So yeah, wondered if you'd sort of dive into that piece that you wrote.
Yeah, this is it's not like if every single person within an organization has used ChatGPT, and again, I stick to that because it's top of mind for everyone, and a lot of people have experimented with it. So, you've had issues where and this turned into an issue. I think for Samsung or one of the companies, but essentially their employees were toying around and experimenting with ChatGPT, and it inadvertently ended up putting in proprietary, confidential information about the company into the model, right? So now that's available publicly. So we're just on that point about adoption, we have adopted AI explicitly, but a lot implicitly, right? So it's not that there's a that's why you would see a large, when you see the adoption curve. But within an enterprise, the scale of what AI can do, we barely touch the surface. That's why we don't say adoption is at the maximum, because you can essentially infuse AI into most digital processes or even manual processes amplified by these models or agents that can transform the business end to end. And we're waiting for that world. And one of the things that I like to think about is, just as we have self-driving cars today, so we've taken a manual effort of driving a car to now completely digitizing that, it's completely autonomous. We're going to go to that same process with the organization. And I think we're going to go into a world of self-driving organizations or autonomous organizations, where agents are doing a maximal number of the decisions, with humans really coming in and helping shape those models and ensuring it's headed in the right direction. So what that means is we're not there yet at all. And so we're barely scratching the surface of adoption of AI. So that's on that first part. And so now we come to trustworthiness. As I said, no model is 100% accurate just by its very nature. These models are probabilistic. There is room for error. There's an error quotient built into the very math of these models, and so that presents a risk. That's one way to look at it. Another way to look at it is the data that you train a model on is only a representation of the world that it's going to operate in, right? So, let's take an anomaly detection model in manufacturing, which is now my favorite one. So you have a vision model that looks at parts that are coming out of a manufacturing line, and you're seeing issues, and it's supposed to detect faulty parts. Now, it's been trained on previous faulty parts. But let's say there's a brand new fault that no one's seen before, and that's now come into these parts. Will the machine pick up on that anomaly? And if it doesn't, there's an error. A really good model should pick up on most of these, and as an edge case may not pick up on it. So how do you trust this model? So the plant manager, whose accountability it is to ensure the quality assurance of their product and the output of their factory, now has to trust this model that it will get all of it right. Yeah. And today, the humans in one of the plants that we were talking to, they think they have an accuracy rate of 96%. Even humans get it wrong. So if you introduce a model, yes, it will give you a lot of cost efficiencies. You don't need to have 10 line operators looking at the faulty parts for visual inspection. A model does that, lots of cost savings. But if the model is only 90% accurate, what happens then? Mm-hmm. So now you have an incremental issue, i.e. from 96 to 90%. And then second, how do you now trust that it will pick up on issues that maybe a human is better trained to pick up on, just because of our faculties? So that's just one example of trust. So there's the inherent uncertainty in the model. It's the specific use case type issues that it emanates in. So the data that it's trained on, right? Has to be representative, how well it's done. So when you have these challenges, that's where the trust deficit comes in, right? And what we will, again, I don't see a world where we will be able to 100% trust the models, but we can get close. And that's the effort right now. How close can we get to understanding what we put in, fully put our minds around it, understand the risks that this presents. Where can this go wrong? And the more better we do that, the closer we'll get to that objective of greater trust in these systems. And finally, safeguards. So when issues do occur, and you anticipate that we do live in this probabilistic world and there's room for error, how do you gracefully handle those error situations? Detect them, identify them, and deal with them appropriately as quickly as possible. Right. So that's how we're going to get to the trust deficit, but that's where it comes from.
I think some of this, I think some of the trustworthiness and the lack of it is sometimes I think is driven by, you get the evangelists leading the charge, the early adopters, but they're so, and this might be a broader point, but I think everything has to be, you have to be pro or against something. You're not allowed to go, I'm really pro AI, but I want safeguards, because you're seen as, backward. And I think the kind of the purist evangelizing about AI is a certain sense is to its deficit, because some people want to unbridled just let it run wild, and you go, well, you can't, because of things like drift, and when you explain it as you do, that the best models in the world will still make errors. But then the other side of that is true as well. If we don't build enough trust, we're not going to adopt broadly enough. We're not going to be brave enough with our adoption. And therefore, if I understand the technology at all, we probably won't be giving it the model enough data. We won't be feeding it enough to continuously learn so it gets better.
Yeah, I think the answer is not we won't be. I think the answer is, how do we?
Yeah.
Right. And I think if we understand those gaps, then we can figure out the solutions. And that's what we're really good at as humans, right? We figure a way out. Now, yes. I'll take a step back as well to say, look, I mean, this is what makes us human. We have the ultimate optimists and we have the ultimate cynics and pessimists. And we need to live in a world that's somewhere in the middle of that, right? And yeah. that's an ideal world. And we do need the optimists to push us forward, and we do need the more retracted ones to understand, okay, what are the dangers, and ensure that we're doing it in a responsible manner, right? I'll give you an example why this is important, right? And I also want to make sure that when we talk about optimism and let it run, there's a whole domain of existential risk that people are worried about, and that's where a lot of this comes from, I think. And I don't want to step into that right now. I think it's a very deep conversation. We can have a whole other episode on that. But the coming back to an example, right? So most people don't know this, but 2 years ago or 3 years ago now, the majority Dutch government had to resign because of an AI model. This was a model that was used in the tax department that was detecting fraudulent claims. And this was particularly related to child welfare reimbursements or claims on the tax sheets. And unfortunately, the model got it wrong, and it basically ended up targeting sort of social economically challenged segment of the population. And so, as it is, you have economic challenges, financial challenges, and now you have the tax department coming after you saying, you need to return this benefit for whom it was designed in the first place. And so that was very embarrassing, and the government was forced to resign, right? But it's not the fact that the government was forced to resign. Take a step back. Think of the number of consumers that were impacted by the use of that model. You had an optimist, probably unbridled, didn't check it, and now you have lives impacted, right? And so we have to remember that who is being impacted, and when these things happen with AI, they happen at a scale that was not there before. So previously, let's say we had, I don't know, just for a number, 100 agents looking through these forms and adjudicating whether the claim is right or not. Now you have one model, right? And so actually, so if you had 100 agents and two of them, were not trained properly or whatever the case may be, they felt something was off, and it was just two of them. But 98% of the claims went through. But now when you switch that to one model, that same 2% issue could be exacerbated across 100% of the cases because you have one model perpetuating and scaling the same issue. That's why this is dangerous, right? And so we doing this responsibly is important. And we also have to be pragmatic in that we're not going to catch 100% of these cases. And that's why, what do you do to protect when these issues occur? How quickly do you detect, identify, and remediate those issues is going to be critical.
Mm. It made me think about the governance of businesses more broadly as well, because I mean, everyone has had this situation where you're dealing with usually a big business, and something has gone wrong in the process. So, I've bored everyone to death on the podcast about I had all these problems with I just could not get a bank card delivered to our office, and everything went off this card, and it just stopped for no reason. And there was something going wrong, but there was no way of coming out of the loop of the process. So you just had to keep going back into the process. And, and it reminds me to a certain extent of that, is that there needs to be a way of addressing anything that does go wrong that accepts that there is a possibility that the model has gone wrong. And the reason I'm drawing that analogy is that we kept having the same conversation, and then we're going, yeah, but this is the process. And I was like, but what do you do when the process is broken? Because what's happened is the process isn't working. So, for the same situation, if the model is broken down at some point or is giving a wrong result, it's building up a framework of going, okay, what do we do then? But also building in an acceptance that is a possibility. And I think sometimes some of the unhelpfulness is about people pushing models going, well, they couldn't possibly go wrong. And of course they can, like most things can. And it's exacerbated problem because exactly as you said.
And this is not just AI, by the way, right?
Of course, no,
this is life. Right?
This is just I'm talking about a process with a very well-known British bank. Just like, it's wrong, and I don't know why, but it is.
Yeah, exactly right. I mean, you can go meta and philosophical about it, but at the same time, Murphy's law is a real thing. So it's processes, it's technology, it's people. We all have errors built into everything, and it's exacerbating when those errors are perpetuated and not rectified soon enough. Mm-hmm. And when we look at these models, I mean, software. I was having this discussion with someone. Even in software, even a deterministic system, it's not a matter of if it will fail; it's a matter of when. Yeah. And and as you keep shortening that gap, right, and the severity, and then you're a better positioned. Mm-hmm. So, having said that, I think what we are trying to do is trying to ensure that we wrap our heads around as much as possible that delta, that error rate. Can we measure that and quantify it and understand the impact? And if we do, then we can step in and say, look, if it does, this is the probability of it going wrong. Let us help you remediate. And, this is where, this is a 4,000-year-old, 400 or 4,000-year-old solution, right? Insurance is not new to a brand new technology. And I think insurance has stepped in as the industry and even the concept has stepped in as a means to facilitate interactions and all of the human activity, if you will, by taking some of that risk away from conducting these activities. And so all we're saying is now, okay, we know this is error prone. If someone takes the right steps to ensure that error is minimized, and detected if it when it does occur, well, then you can now get a protection. So for when things do go wrong, so that those are good risks that you can take on. So now the question becomes, how do we measure this risk? Existing policies that we have in place as insurance do not adequately price this risk in, and that's the challenge, right? Most organizations, well, I've got cyber insurance, I've got my E&O, I've got my general liability insurance, etc. It's true, it does cover, but those insurances policies do not adequately price in this new risk. And that's what we need to change. So before you can price that risk, you need to quantify that risk. So we do both, where we've started quantifying that risk, helping organizations put in the right assurances and assessment practices in place, and then you can then get a suitable enough risk protection or risk transfer through an insurance product.
Mm. The the Lloyds Lab is where we met you for the first time. Cohort 10, weren't you? And we were there from pitch day to midpoint trade show. I just wanted to sort of understand that experience. You know, what did you come to Lloyd's kind of with and for, and how much did that kind of shape where you are today?
Yeah, excellent question. Look, and this is with a lot of humility, I will say that we we're technologists, right? That's the world we come from, and but we know enough that having we've also worked with insurance companies, we built actuarial models in the past. My co-founder and I have been in the AI space for the last 15 years, so it's not something that we stumbled into in the last few. We've actually built companies around this, and so we've been exposed to how insurance steps in, and that's where we started thinking. From as our clients were telling us that, look, you can help us measure the risk, but the risk still exists. So now what do we do? And that's when we got to thinking that there was a gap in this market. Okay, so technologists seeing this problem, and we had a good enough understanding of this. And even though my wife is a chief compliance officer at a large insurer here in Canada, my understanding was superficial. So we did a lot of research and learning through this. What we found with Lloyd's was the opportunity to get a deep dive, a crash course, if you will, on are we even thinking about this correctly? And that was a question we entered the lab with. See, we're seeing this problem. Our clients are seeing this problem. We think insurance is an answer. Let's go workshop this through the Lloyds Lab accelerator. And we were lucky because maybe the timing was right with ChatGPT coming in and AI taking sort of everyone's capturing the imagination. We had several mentors from several syndicates who came in saying, yes, we think there's something here we would like to work with you on. And so we spent 3 months presenting the problem, getting their feedback, and really workshopping, is this real? And if it's real, how do we actually go about solving it? And we exited with creating our first product, right? Which we launched a couple of weeks ago, which is the product guarantee, right? So we can now guarantee the performance of a model, and in partnership with Swiss Re, Greenlight Re, and Chaucer, the Lloyd's syndicates, who really innovative companies that really understood what we were trying to solve for and agreed. And so that's the first foray into this. But all of that came through because of the mentorship. What we entered with as an idea and what we exited with as a solution, the idea was right. The solution got refined through that process.
Yeah. I think it's such a good example of what the lab's there for. It's to bring in new ideas, new people, new thinking to insurance, and it's to sort of allow you to kind of plug into that insurance expertise. So you go with exactly that, a variation on probably what you did, and sometimes even like a failure, and saying, right, this really doesn't work in the way that we're thinking about it, but it will in this. did they all come on board? Were the mentors come on board with providing capacity as well, or was there was a relationship? Did it go that far?
Yeah, absolutely. So, Greenlight Re and Chaucer were our mentors in the lab, and yeah, I mean that's how we got we that's how they came in to provide capacity to the product.
Awesome.
Um, and look, and that's what needs to now happen is to ensure that the market understands that this is something that they need, that there's an option for them to
Mm.
protect. um, and we're really excited because if AI is going to get adopted at the scale that we think it's going to get adopted, there's reports everywhere, but largest one I saw was 15 or 30 trillion in economic activity that is going to
Wow.
get impacted by AI,
Mhm.
right? And so when you look at it from that standpoint, and now we know that every model has some level of risk that's just by design built into the models. 15 trillion, just do the math. I mean, that's a huge
Sure.
amount of risk that's going to emerge. uh, we need to have a solution for it. And I think that was the, I wouldn't say it was an epiphany, but that was certainly the realization, more visceral realization that everyone at the table, including us and our mentors, got. And yeah, I think and we were working with the ones that I think are at the forefront of the innovation spectrum in the lab. I mean, there's others, of course. Don't get me wrong. It's just um, we ended up working with the ones we did, but at least the
Yeah.
market now understands. Yeah.
Yeah. I mean, it's yeah, we know the Green Lantern team and the Chaucer team really, really well. And as saying, okay, I couldn't. You'd struggle to find two better places to kind of work with on something this at the edge of kind of what insurance can offer. But is there I don't know, we'll have to start to wrap things up. But I was thinking about the way that you could sell. Is it, have you looked at kind of embedded as a potential option in the future? Is that something that's being considered?
I think there's different many different business models. Embedded is certainly one, right?
Yeah.
Where you can be embedded within an AI, AI vendor's product, and they, and this is a big value proposition for them. So if you look at, I've only spoken of the enterprise, but if you look at it from a vendor standpoint, when that trust deficit exists, how do these, I don't know, what 1,000 different companies that have been created that are now working with AI and building innovative solutions, how do they get across a trust factor so an enterprise can purchase and adopt their solution? Um, and so we provide a path now to say, we will come and assess as an independent third party and then assure and guarantee that your model will deliver, which allows an enterprise to buy your solution with greater confidence, right? And perhaps
Mm.
faster.
Mhm.
And that is that is essentially an embedded opportunity, um, a way to look at it. But there's other sort of go to market opportunities as well. As I said, from the enterprise, that's a different value proposition as well. Where for the enterprise, it's well, how do I scale this across all of my purchases, or adoption of third party AI models? How do we do that in a compliant and confident, in a confident manner? Um, like I think the we're just at the very start of this journey on risk transfer solutions for AI. Some exist, but what needs to exist, the future is going to look very different. How, and this is going back to your very first question, where is innovation going to come from for insurance, right? Is it just this digitization, or is it different ways and modalities? I think if we need to start thinking out of the box how we even insure these models, and what we insure is going to be another sort of segment of thinking and innovation, and how we even capitalize that risk is going to be up for debate as well. I think that there's opportunities to do innovative ways, like is there a mutual way of doing this, right? A
Yeah.
shared risk pool.
Hmm.
Is there you know alternative sources of capital? And these conversations are happening elsewhere too. But innovation is not just completely brand new. It's how do you even pick up existing things and bring it into a new context and employ that to benefit. I think all those opportunities exist in this current environment of AI risk.
Yeah, I agree, and I think what's exciting, and certainly for a person that's worked in the insurance space for 17 years, is speaking to people like yourself, and I think we need to do more of that. And look, I'm not going to bang my talent hat for too long, so I managed to avoid saying that I work in the talent industry for a little while. But that's what we've needed for a long time. We need experts that come in and bring new ideas, and then look at what we do in insurance and risk transfer in a different way. And I think, Armilla is a perfect example of that. Karthik, I could talk to you for hours, and we could really get into the kind of the really high level meta conversation about AI. But thank you for being a guest. I've wanted to do this for a really, really long time. So I really appreciate you being a guest on the Leadership Insurance podcast.
No, absolutely. Thank you so much for having me. I've always enjoyed our interaction. So this is excellent to probably put it on the record. So thank you for having me.
That's really kind of you. Thank you very much for your time. Appreciate it.
Thanks, Alex. Bye.